Hi, good morning, everyone. Welcome, guys. If you can see and hear me, just type a GM for good morning, guys, before we begin this session today. Let me know, type GM for good morning. I think some of you have already joined us. Hi, good morning, Gurmit. Hi, Lily. Hi, Farhan as well. Benny, Alan, Andy. Good to see you here as well. Michael, good morning. Stephen, Damien. All right, guys, welcome to this session called the One Good Trade live show. All right, and today is something different, right? For those of you who have been joining us every single Friday, what happens is that on Friday, right, we cover what we call the AMA, Ask Me Any Stock session, whereby me and my team, we go live and we answer the stocks that you guys are asking about, right? But today is not Friday. Today is Tuesday, all right? And today I have a very, very special guest with me today. And we call this show the One Good Trade live show, right? So let me just go to introduce my guest, Jamie. All right, Jamie, are you here? All right, just turn on the camera. All right, so I have a very special guest right here, Jamie, who is
Hi everyone, good morning. Very pleased to be back on the One Good Trade live show again. We last met maybe just about 2 months ago, where we talked about Yangzijiang, and very excited to hear about CityDev and Joey's views on it. But most importantly, to meet all of you here, and hopefully, you ask me some questions that will help you trade warrants that will generate you higher returns based on Joey's stock ideas. Good morning, everyone.
Good morning. Thank you so much, Jamie. All right. So yes, guys, as I say, today I have a very special guest right here, Jamie. All right. So this show, the One Good Trade, a live show, is where we pretty much dive into one Singapore stock. All right. Okay, maybe we'll do a quick recap of what happened the other time, right? But I will dive into one Singapore stock and why I like it still. What are we seeing on the charts? How can you potentially position for it for even more upside? And then Jamie will come in and add her own views, an expert take, right, on how one can actually use structured warrants, right, to potentially increase your ROI, all right, your returns, right, and that's something very exciting as well. All right, so later we'll cover pretty much a quick recap, and then we'll do one new Singapore stock. All right, Ken, are you guys ready? Just type R for ready, guys. If you guys are ready for today's session, all right, let me know. Type R for ready before we get started today. All right, good morning, Jamie. Awesome, right? Good morning. So I think just help us to like and share, guys. That will really help out the channel. All right, and of course, if you have not yet subscribed to my YouTube channel, and we're live on Facebook as well, make sure you just hit the subscribe button, the follow button somewhere at the top, so that when we go live in the future, whether we go on a Friday, Ask Me Any Stock, or even today's One Good Trade live show, you can be notified as well. Right, so are you ready? Ready, right? Very good. So what should we do first, Jamie?
Well, I'm ready to, Joey. So I guess one of those things we like to do is really to recap on the last idea, the last one good trade idea that you proposed, and really to see how it pans out. Always very excited about this segment because I think it does showcase, and it is what it is, right? That showcase the fact on whether Joey has been spot on or not, right? So over to you, Joey. Tell us, since our last show on the 26th of August, how Yangzijiang has done and whether your target price of, I think, was 350 was met and how it was met. And if there are investors still looking at the share, what can they look forward to? Is this the end, or do you have further views on the share?
Okay, good. Maybe we'll do a quick recap on the previous stock that was shared previously, Yangzijiang Shipbuilding. All right, and then after that, maybe you can take a look at the warrants as well, right, to see how it plays out. All right, okay, good. So just a quick one, guys. A quick disclaimer that whatever that is being shared today, and as usual in our live session as well, is just for education purposes only. All right, so please do your own due diligence. Not really to ask you to buy or sell anything. Basically, I'm just showing you guys the process, the One Good Trend framework, which I'm using, even the tools, the One Good Trend Pro indicator that I'm using. All right, and you control your own decisions. Cool. All right. Okay, so I'm going to talk about Yangzijiang. All right, Yangzijiang Shipbuilding. Right over here. So I think I covered it somewhere in August, September, I think a couple of months back, when I think it was like right over here. And we saw a very good rally. All right. So let me just do a quick recap as to what has happened for Yangzijiang Shipbuilding over the past like maybe 6 to 7 months. Right. You can see that it's not always that bullish, right? Sometimes you have what we call bearish 1GT signals, right? So for those of you who have been following me, right, essentially I have this strategy that I've been using for more than 10, 15 years now that I call the one good trend strategy. And based on this strategy, right, which forms the backbone of the one good trend pro indicator right over here, whereby we can, in a matter of seconds, turn on bullish and bearish signals, right? In seconds, you can see right over here, bam, gone, right? Blank chart, almost nothing. Turn it on, bam, there we go. So, you guys know on when to get in, when to get out without second guessing, without overthinking, without, all the confusion and stuff, right? And well, we get bearish signals, it starts coming down, and there's just some confirmation of more weakness. So you can see the green 20 days moving average line started to turn down, 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 and there we go, right? I think that was where Trump kind of introduced what we call, export kind of like fees on, I think, on Chinese ships, right? And then that's where, it slowed down all the way by about 30%, and then we got 1 GT bullish signals, the short-term trend, the green line started to turn up. And there we go. So I think we covered it, I think in Jamie, somewhere around August, I'm not wrong, right? Maybe somewhere over here when it was like a 280, 270.
26th of August.
Yeah, 26th August. So maybe, yeah, right over here, all right? And it started to push up from 280 plus all the way to our 350 target, if I'm not wrong. I think $3, 350 target. And what happens was that we actually, so you can see, guys, not too bad. We got the first bullish signal. It went sideways a little bit. The second bullish signal came in right over here that triggered more upside momentum. We talked about it in the One Good Trade live show when it went up a little bit higher, all right? But it has gone up from here all the way to here, about 44%, all right, in about 3 months from that second 1 GT bullish signal, all right? Of course, from when we covered it to here, maybe about 10, 15%, all right? But the fact is that we got actually a new 1 GT bearish signal coming. I think that was on, when was that? I think that was on the 14th of October. If I'm not wrong, I think about 2 weeks back, there was some escalation in, tensions between US and China, when China kind of like introduced what we call the export controls of its rare earth minerals, all right? And, Trump kind of like threatened that, he's potentially going to increase tariff by an additional 100%, all right? If, they do not make a deal, all right? And of course, Yangzijiang being a Chinese shipbuilder, of course, get hit a little bit, right? And that's where we sold off. And that's where we triggered what we call a new 1 GT bearish signal. But it's still okay. I think it's the 44% gain from the very first 1 GT bullish signal all the way up. And let's take a look, right? So let's take a look at what's happened over the past one over a week. Well, it seems like we have found a good support right over here. So after the bearish signal, we actually went sideways a little bit above that 315 to like $3.10 support level, but it seems like right now, right, we have yesterday, right, triggered a new bullish signal, right, a new 1 GT bullish signal. So yeah, we got an exit, 44%, not too bad, but potentially, right, there could be a re-entry again, all right, if I think if if we can break what we call that 360. So I think we need a bit more confirmation because the bullish signal just came out yesterday, right? And the green 20 days moving average line, you can see, right? It was like up, flat. We got a bearish signal, take a rest, take a breather for like about 1 over a week. Over the past few days, you can see the green line starting to turn up, right? We got a new 1 GT bullish signal as another confirmation. So normally we want to seek what we call a few confirmations out of the entire 7-step checklist that I have, right? And I would say that the other confirmation would be if we can break the 360. Why? Because you can see 360 was where we were in October, 8th of October, all right? We hit it there, we sold all the way down. We are near here again. That's why I've drawn this red color line right over here. That's what we call the horizontal resistance level. So I think if we can break the level, we may even see a new second 1 GT bullish signal that could lead to more upside momentum. And you can see I already set my alerts, right? 363, 362, maybe let me just put 364 as well right over here. So I think we can breach 360, all right? We go to 361, 362, 365, whatever, right? I think that is where potentially we might see more momentum, right? There could be more leaks to this rally after you sold off about 2 weeks back, all right? And that's where I think you guys, I want to put this stock in your watch list again. All right, so maybe I can pass on the mic to Jamie to share with us. Jamie, what has happened? I mean, previously when we covered it, it went all the way up, hit the targets, and perhaps what one could do as well right now. I mean, to potentially, write even more returns on Yangzijiang Shipbuilding. Jamie, what else?
Yeah, so Joey, I mean, the name of our show is One Good Trade, right? So amidst just so many ideas out there, we really just want to narrow it down to one stock. And
Yeah,
of course, what we're also concerned with is the levels where we really hope to exit from after entry and of course cut loss from.
definitely.
In this case, your target price of 350 was met quite
Yeah,
shortly after we did the show. So I just want to refer us to my website, warrants.com.sg, where we've got all the warrant tools available, including the historical performance tab. Now I'm clicking on it from the warrant tools drop down to have a look at how the Yangzijiang warrant, call warrant in this case, performed based on the time frame from 26th of August to now, or rather to when 350 was first met in a chart. And the warrant that we were talking about and going through with on the last One Good Trade live show was KLGW. Okay, so I'll just click on KLGW and I'll change the date for 26th of August because that's when we did the show to the first date where 350 was seen in Yangzijiang shares. 350 being your target price would then be the price that investors should exit from the share or the warrant if they bought the warrant. Now, if they had entered the Yangzijiang call warrant on the back of the show at about 2 Singapore cents, what happened when Yangzijiang went from 297 at that point in time to your target price of 350, in this case 352, is that with the Yangzijiang share price, it would have gone up 18.5%, which is very good, on the back of just 42 days, right? A holding period of 42 days. Very good returns, ladies and gentlemen. So if you had followed Joey's call, congratulations. But if you have gone in via
nice.
the call warrant KLGW instead, now you would have made 45%. The last show, we endeavored to show you how the Yangzijiang warrants will perform, on the back of Joey's view. And in real life, basically what happened was that it made about just under 3 times more than Yangzijiang shares. Why 3 times and not more? That's because every warrant has got an effective gearing level. And in this case, the effective gearing level tells you for every 1% move in the share, how much more could the warrant move by. In this case, this Yangzijiang call warrant at that point had a gearing of around just 3 times. And so you see that the historical performance of this is therefore that the warrant moved the warrant moved around just under 3 times of it, right? Because of the time decay, the holding cost that set in across this 42 days. But still a very good result. You have made 45% instead of the very amazing 18.5%. So if you had gone in via, the Yangzijiang call warrant, well, congratulations. The whole purpose of this show, apart from telling you the one good trade, is to tell you how to use warrants to amplify your returns. So now that we're done with Yangzijiang, obviously Joey is saying that there could be further bullishness, but until then, let's have a look at the one good trade, Joey, that you're going to cover today that's already looking very bullish at the moment, and which we can then tell investors on how they can use a call warrant to amplify their returns. Back to you, Joey.
All right, thank you so much, JB. So, guys, I mean, take a look at what JB has shared, right? So, if you've gone in on Yangzijiang, right? I mean, if you've gone in on the underlying, you'll be at 18.5%, which is pretty okay, right? 18.5%. But one thing I want to share is that, like what Jamie has emphasized is that if you actually use what we call the warrants, then it's a different story, right? Your returns is not 18.5%, right? It's like 45%. So that's how warrants, of course, if you pick the right direction, the right trade, position yourselves correctly, you can potentially increase your ROI. All right. Okay, very good. So now let's go to cover pretty much the stock for today that I like to share with you guys. Because Jamie will come back as well later. All right, to give a take on how one can position using warrants as well. All right, and hopefully you guys can think about how you can potentially have an entry in this stock as well. So this stock is none other than let's see, right over here, CityDev. Let's put it out from my watch list right over here. And there we go, right? So this is CityDevelopment. One of the stocks that we actually shared with our clients in Philip Securities a couple of months back. You can see that, okay, very quickly, let me just show you. Previously, if you asked me in 2024, maybe beginning of 2025, well, this stock had quite a lot of bearish signals. Look at this, right? So we got 1, 2, 3, 4, 5 bearish signals. The longer term trend, if you ask me, look at the red and the blue line. That's how we kind of like identify the longer term trend, right? So if the red 100 days moving average is below the blue line, right? Red below the blue, both pointing down. I would say that the longer term trend is down. So if longer term trend is down, plus you got five bearish signals, then of course, please don't go and buy lah. All right. You want to be careful, right? You want to wait for the confirmations to get back in. You want to wait for what we call reversal signals and for the stock to show its hand. All right. Did it show its hand? Yes, it did, right? The first showing right over here, that's the first 1GT bullish signal. But I would say the second and the third really sparked it, right? And that's where we started to see a bit more upside. You can see longer term trend starting to turn from down to sideways, eventually turning back up when the red went above the blue line. All right, the green line, all right, since the first bullish signal has started to turn up, flat up. Is it still up? Yes, it is still up. So the short-term trend obviously is still up. And just based on this, first bullish or maybe the first and second 1GT bullish signal right over here to now, it is a 64.6% gain in about 6 months. All right, pretty cool, right? 64.6% in 6 months. I know some people may say, hey, Joey, 64.6%, it already went up by quite a lot. But to be honest, when it was somewhere around here, all right, over here, when it's like 43%, people also say a lot, right? But now it's 64, you say a lot, right? I don't know whether it can be 80 or 90 or 100, but the point here is that why not we continue to ride it until there are signs of weakness, until there are signs of a reversal back down, right? So you can see that over the past 1 month, well, we got another new 1GT bullish signal actually coming out as well, right? So not too bad, right? So what we can do right now is that I can turn on from this one good trend pro indicator that I have, right over here, the trailing support and resistance. So you can see, right, when the very first 1GT bullish signal came out in April, that was in April, guys, right? So actually, past 6 months, anytime, right? Anytime, I mean, not say anytime, but if it dips to what we call near the trailing support, a potential entry could be taken, right? Like right over here, you can see, right? It dips to near trailing support in June. There we go. Right, let me just pull out the name of this stock, City Development, right over here. Yeah, correct. Right, so you can see near the trailing support, we're above it. Short-term trend is up. There we go. Rebound. Right, same thing. Right over here, we neared the trailing support. We neared it. Right, those could be very good opportunities to think about getting in to ride the uptrend even further for a stock that has already proven itself in an uptrend, right? And I think all of you can agree that we don't see any red color bearish signal right now lah. Does it make sense? I mean, what do I mean by red there? This thing lah, right over here. There, this red. I mean, do you see it over here or here or here? I don't know, but as for now, don't have. Does it make sense, Bob? All right. So why not ride it further? All right. Till we see signs of a bearish signal, till we see signs of other confirmation that it might potentially reverse back down, right? Because right now, I mean, over the past 6 months, there is still no signs, right? So what we could do right now is that a potential entry, I should say, could be anywhere from near $7 to $7.20, $7.30. I think that is where we could start to see some support. Look at this, right? This is also where the trailing support is. I could also draw a horizontal support, and it also coincides with $7 psychological level right over here. So $7, and I think when we shared with our clients in Philip Securities a couple of weeks back, I think it was quite near the $7. But yeah, I mean, yes, rebounded a little bit, but just take note, right? 750 would be what we call a psychological resistance level. Now it's 7.49. Correct? So it's a bit of profit taking near 750, which is correct, right? That's where we could see some selling, all right, a bit of profit taking because we have pushed up by quite a fair bit over the past few days, a couple of green candles. So normal to see a bit of consolidation, a bit of profit taking near 750. But I think the point I'm trying to make is that if we can break 750, we go to 755, 52, 54, 58, right? That's where potentially targets could be revised even higher, maybe all the way to even $8 and maybe even to $8.50. All right, we could do a little bit of a projection in that sense, right? From the consolidation range, you can see right over here, we shift up to here, shift up to here, even shift up to here, right? So above 750, 8 or maybe even 8.50 could be what we call near-term targets. By some selling can happen again. All right. So this is City Development, one of the stocks that we have shared with our clients in Philip Securities. We have a couple of bullish signals. It still looks good. So I thought, why not just show it up again? And now, of course, now we have an expert, Jamie, right, from Macquarie Warrants, that will give a take as to how one can not just you can buy this stock as an underlying if you want, but how you can actually potentially position yourselves for even more upside. All right, using warrants, right? What will be the gains, right? Let's say if you're buying the underlying and you're buying the warrants, what is the difference? All right, so I'll leave that to Jamie to cover. All right, a bit more on warrants. Right, Jamie, back to you.
Yes. So question is, what if you're like me? You've missed CityDev's rally from the start of the year when it was just $4, and then of course now it's almost double. You know, Joey's saying that there could be more upside, especially if it surpasses 750. But you've already missed out, right, on the whole $3 kind of rally. What can you do? Now, one of the options that you can explore is to use warrants to trade the further short-term upside. The reason I say you use warrants to trade the short-term really is because, as opposed to someone who's bought and held it for $4, the upside now is obviously less, but still nevertheless, a very good, well, I would say around 6% return, which you may not necessarily find in every other stock, right? So if you think this is still decent and you wanted to enter with less capital at risk, and at the same time you want to amplify this 6% to something greater, you can then consider warrants. Now, let me show you how the warrants will perform based on Joey's view. Okay, so back to warrants.com.sg. Earlier, we were looking at the historical performance tab to see how the warrants have performed historically. Now, we will use this tool called the Warrant Selector tool. Okay, that's the second tool on the warrant tools drop down to simulate the returns on CityDev warrants so that you can see and understand for yourself how warrants work. Well, visually, you're going to see the percentage simulated returns, but you're also going to see something else, which is the maximum holding period that you should be holding on to the warrants for in order to achieve these returns. Now, you choose CityDev, and of course, because you're bullish, you think that you're basically positioned for when CityDev crosses above 750 and then ride it to $8. In that case, you choose a call warrant because you're bullish. But of course, if you think that CityDev is not able to go above 750 and is showing resistance there, or if your current shareholder, you think that could be a short-term pullback, you can then choose a put warrant. Okay, so for the purpose of this demonstration, we'll start with the call first. And basically, CityDev is right at the resistance level. So we are at a very interesting point where we're really watching to see if it would, cross above 750, right? We want to enter only after it successfully trades and crosses above 750, where we have got confirmation that this is not the resistance level that is stopping the share from heading towards $8. And if so, you then want to enter only when it's above 750 and say around 755, well, you can enter that as the last price. And what you see is that the price of the warrants will update to what they will be today if CityDev trades to 755. Now, this price is going to change if you use it tomorrow instead, because we're pricing it as of today. So you can use this selector tool anytime whenever CityDev crosses above 750 or whenever you are standing by to enter when it crosses above 750. Okay. Now, when it crosses above 755, I think the next resistance level, the exit level we're looking to aspire towards is $8, as Joey said, which is around 6% higher from 755. Now, if so, we want to know how the warrants would perform. There are two warrants here that are traded on tight spreads. One of them costs 5 cents, the other costs 6.5 cents. This has got a fire logo because it's got the most amount of liquidity, the highest volumes available in bid and offer, and the tightest spreads. But of course, both are available for your selection. Now, let's see how both will perform. In order to do so, we increase the number of weeks, okay, to 2 weeks, right? Because now you've basically got a table where it shows you the simulator of the CityDev warrants. Today, if CityDev shares were to go up 6%, 1 week later, if CityDev were to go up 6%, or 2 weeks later, when CityDev warrants will go up 6%, what you're going to notice is that if it went up by 6% in a week's time, this first call warrant here will gain 36%, which is 6 times more than CityDev shares. This second warrant here will gain around 34%, which is more than 5 times CityDev's 6% return. But if it took 2 weeks to go up by 6%, you'll find that the percentage returns are less. Right now, they are 32% each. Why is that? The reason is because the longer you hold on to the warrant, the more time decay the warrants holding cost will set in to eat into the geared returns of the warrants. Having said that, we would then want to work out the maximum holding period on the warrants because, like I said, time decay is going to set in with time, right? So you want to see, the maximum you can hold before the time decay entirely consumes the geared returns on the warrants. So you can see the percentage gains of the warrants will keep decreasing, all right? And you want to keep increasing the number of weeks to the point where you see, almost no more leverage, almost no more geared returns versus CityDev shares. Now you see that in 9 weeks' time, this first call warrant with the fire logo VY2W will make exactly the same amount of returns as CityDev shares, which means if you choose this first warrant, all right, your maximum holding period cannot be more than 9 weeks. Okay, why? Because if you hold it, for 10 weeks, the return you get on the warrant is now going to be less than the return you see in the shares. Okay, so the maximum holding period should be 9 weeks of the first warrant. But the second warrant here on the 9th week is still going to generate about more than 3 times more than CityDev shares, which means if you choose it, you can afford to hold on to it for longer. You see, if you keep increasing, by the 11th week, the first warrant now will actually make negative returns, even if your view is right, which is why with warrants, the maximum holding period is very important. You should never keep holding on to it blindly, but you should use tools such as a selector tool to know what your maximum holding period is, okay, so that you can continue to make returns if your view is correct. So on the second warrant, you see even if you held it for 13 weeks, it's going to make 3 times more return, a bit more than 3 times more returns than CityDev share. So if you wanted to hold for a longer period, you can choose this second warrant SCEW, which costs 6.5 cents to enter, a bit more than the first warrant, but you can hold on to it for longer, for about 13 weeks. Okay, whereas if you want to hold the first warrant because in the short term it's going to make you higher returns, you just need to note that the maximum holding period is 9 weeks. But if CityDev shares went up by 6% in less than 9 weeks, then you're going to make if it happens in a week, you're going to make more returns compared to the first warrant. So whether you choose the first warrant VY2W or the second warrant SCEW is entirely up to you. But with both warrants, you need to note what the maximum holding period is. The last warrant here, like I said, it's going to expire if you held on to it, for basically more than 13 weeks. Okay, so warrants are a bit different. They cost less, they require less capital, but at the same time, they've got a maximum holding period compared to if you bought shares, right? One habit we have when we buy shares is we're going to keep holding on to it until we get our view right. But with warrants, you can't do so. You need to be aware of where the exit levels are, and then you take your profits. Or if it doesn't get there, you need to learn how to cut loss. And on that, I guess my next question to Joey is, what will be a cut loss level that investors should pay attention to pay heed to? Or in the case of, where CityDev shares are currently, it fails to surpass 750, where could it potentially pull back to, Joey? Because then we can look at potentially how put warrants will perform, but we can also look at how these call warrants will perform if their view was wrong, and doesn't go towards $8.
Yep. Got it. Thanks so much, Jamie. All right. I think Jamie mentioned a very, very good point. All right, regarding on stop loss, which I'll cover in a bit. But I think what Jamie shared as well, I think you guys want to take note. Like you can see that when we talk about the underlying just now in terms of the upside target to $8 to $8.50, let's just say $8, which is like Jamie's price in terms of the target price. That would be a 6% on the underlying. All right. But of course, if you look at warrants, guys, if the price moves up to $8 within a week, all right, then it will not be 6%. It will be like 41%. All right. For the first warrant, it will be like 38%. You can see that that's where your gains will be magnified, right? Especially if it happens fast, right? Within a very short period of time, you get the direction right. That's where you get the leverage, right, in terms of warrants. All right. Okay. Now let me go back to my charts to kind of answer the question that Jamie has mentioned as well regarding let's assume that you get in, maybe earlier or maybe over here as well. What could be the stop loss level, which I think is very important because, you know, when people think about buying, most of the time people just buy and then leave it there and hopefully it works out, right? It goes up, goes down, they don't know what to do and stuff, right? But for us, it's very simple. We have a plan to get in and of course to get out as well, all right? If the trade were to, you know, go south, right? If there are signs of weakness, as I say, right? So what we could do is very simply to turn on. So you can see, since April, we got 1, 2, 3, 4, 1 GT bullish signal. It has gone up by, you know, more than 40% all right, from the very first bullish signal. Sorry, 60% all right, from the underlying. This is not warrant, from the underlying, all right? Of course, it's warrant, it's another level already, right? But 60% from the underlying, right? So how do we, you know, allow the stock to ride the upside, right? To continue its uptrend without cutting our profits short, right? Because some people might say 60% is a lot, but some say 30% a lot, some say 25% a lot, 20, 10, 15, 18% a lot, right? So along the way, you might 20% a lot, you just sell. But then why you sell when actually can go up some more? Does it make sense? Well, right? So how do we kind of like take steps to protect our profits while also not cutting it short? All right, like just cutting it off, eventually can go up some more. Does it make sense? Well, how do we do it? Well, essentially, the answer lies in what we call a very powerful feature of the One Good Trend Pro indicator, and that would be what we call the trailing support and resistance, which I put out just now. You can see that, you know, this trailing support, as the name sounds, right? It follows city development, right? CityDev. Since April, as the price consolidated, it move up, consolidated, it move up. It's been following it, right? But don't follow too close. Like you give a bit of space, right? We account for any natural volatility and then any natural pullbacks, right? So if it dips to near the trailing support, it actually could be a really good entry. In fact, I think like 2 weeks back, we neared it and then you see now start to rebound again, all right? So 2 weeks back when we covered it, it was pretty good. But of course, it's rebounded, right? So entry near trailing support, of course, we see some bullish candlestick price action there. Even better, that would be another confirmation on top of the other confirmations that we look for, right? So I don't have time to break it all down for you guys in terms of the whole strategy and stuff. Maybe later I'll put the link. If you want to attend, you know, find out more, you can attend a free webinar to do that. But today will be just a very quick breakdown, right? So essentially, we want to time our entry near the trailing support, apart from all other confirmations. And if we were to stay above it, then not too bad, right? And we are obviously still above this trailing support, which is around the $7. So our stop loss could be placed. What happens is that below the trailing support. So for example, let's say you got in over here, right? I mean, let's say you got in at 550 or what, right? Okay, maybe like right over here at $5 and we got 3 bullish 1 GT signal, right? So we get a stop loss right over here, right? Let's just put it as a red color and that's what we do, right? Something like this, right over here, right? So you can see, right? This is a stop loss. You put it below, not above, below the trailing support level. Why below? Because this trailing support give the stock the space to breathe. All right, we want to, you know, let it, you know, breathe, give it the allowance is needed to move naturally, right, along with the trend. All right, so as long as you're above its fine, right? But if we give you the space and then you go below it, then something is wrong, right? So you're gonna put the trailing support right over here. You'll put the stop loss below the trailing support just to give it an additional space, right? In case it really go below, right? So that could be where the stop loss is. You can see we raise it up as the price goes up. There we go. We raise it up. We protect our profits as it moves even higher. You see what I'm saying so far? All right, there you go up. It moves up even more. We raise it up over here. All right, there you go up more. Now is right over here. So we can put a stop loss, I would say below $7, right? 6.95, 6.92, 94, 98. Not 98, right? Maybe give a bit of allowance, maybe $6 and 94, 6.90, 6.92. Just below it, all right, 2 to 3% below it, a couple of bits below $7, below the trailing support. That would just give it the space needed, right? In case it would go below it. If it's still above it, fine. Continue riding like what we've done over the past 6 months. Does it make sense, Bob? All right, so that's where one could set a stop loss. And of course, we have these two to help us to know exactly where to set it so that we don't cut our profit short. And we also allow the stock to prove itself even more in the winning uptrend. Cool? All right, so let me pass on the mic to Jamie, all right, just to add a little more as to now, based on this stop loss, how can we actually take, how it affects the warrants as well. All right, Jamie, back to you.
Yeah, thanks, Joey. So knowing your entry exit and of course cut loss levels are very important with any trade really, which is why I asked Joey the question on where the stop loss is. Now back to the example of the selector tool where it tells you how the two CityDev call warrants will perform based on Joey's $8 exit, the entry of around 755. Now, how would they perform if our view was in fact wrong, or if there was, there's so much volatility right now, right? You've got, Trump and Xi Jinping meeting, you've got earnings season, happening. And so anything can happen. So even if it's trending very nicely, if the whole market tumbles, it's not going to be spared. So in that case, where can we look to cut loss? Now, these are very nice returns, in the short term, but if you were wrong, warrants will also magnify your losses. So it's important to know where the cut loss levels are and the kind of potential losses you might make. So if I say we put in a 695 cut loss level, which is 8% below where we entered, you need to note that you're also going to see magnified losses. So in a week's time, it's going to be down about 40%. And like I said, the longer you hold, the more you're going to lose. And earlier I said the maximum holding period is 9 weeks. So in 9 weeks time, if the first warrant, is a maximum holding period, as I said earlier, and CityDev is not at $8 where you can exit, what happens? Then I would say you need to cut your losses of 65%. Very painful, I know, but bearing in mind two things. One is, first of all, you only got in at a smaller capital outlay of 5.1 cents. So the absolute realized losses in dollars could actually be lower than how much you will otherwise suffer in the shares, depending on your holding amount. But the other thing is 65% is a lot. But if you were to go again via another warrant or even in the same warrant with a refreshed view, you could make back these returns, right? Because the kind of returns that warrants make can be a lot. I'll give you a very quick example, right? The Nikkei has been very strong over the last 8 weeks, and it's been up about 20%, but this warrant made 220%. So warrants can make back returns for you, provided you know how to use them, you know how to cut your losses, you know how to get out. Okay, so using the view of just about $7, a trailing stop loss level of $7, what else can we do with this knowledge or this level if we think that it's not gonna make it past 750, the resistance level? In that case, we can consider the use of a put warrant. Okay, if you are currently holding on to CityDev shares and you wanted to use put warrants to really hedge against the pullback on in the short term. Okay, so like I said, if you bought call warrants, you might want to cut your losses and exit, or you can consider using put warrants then, in the event that CityDev does a very strong pullback. You can then use it to hopefully make back your losses, or if you're a current shareholder, you can then use put warrants to hedge the pullback in the short term. So this is the exposure simulator tool, which does two things. It tells you the estimated investment amount, that you can make in the warrant, and it can also tell you how you can use the warrants to replicate or to offset, to hedge your shareholding. So in this case, there's only one CityDev put warrant here, KBPW. That's for those who are current shareholders of CityDev shares and want to hedge a pullback to the cut loss level, in case CityDev keeps pulling back quite a fair bit in the short term, and you are fearing that your portfolio will take a knocking. So assuming you hold about 10,000 CityDev shares at $7.50, your portfolio will be valued at $75,000. Okay, but if you wanted to use this put warrant now, KBPW, which costs about 2.4 cents, to hedge, in the event that it pulls back to maybe around 692, which is around 8% lower from where it is now, you can invest $14,151 in this put warrant. Why so much lesser than this underlying portfolio value of 75,000? This is because the warrant has an effective gearing level of 5.3 times, meaning this warrant is going to move 5.3 times more than the CityDev shares. And so you invest 5.3 times less in this CityDev put warrant, okay? Which in turn translates to 590,000 units of this warrant, which means on your, on your brokerage platform, you will find this warrant, KBPW. You'll find that the price is 2.4 cents, and then you'll buy around 590,000 units. Okay, you enter 590,000 units of this warrant and buy that, which is going to be a value of about $14,151. Okay, and you can then use this warrant to hedge. But how will it perform if CityDev shares were to pull back 7.7%? Now, if CityDev pulled back about around 8%, your portfolio of 10,000 CityDev shares will take a knocking of $5,800, right? You're going to suffer a loss of $5,800 in your portfolio. But if you bought this put warrant, okay, you will be able to offset this loss. How so? Depends on, again, the holding period, right? Of course, if it happened today, you're going to immediately make 50%, which is a 7,000 return to more than offset your losses of 5,800. But let's say if it took, a week's time for it to pull back, you'll find that this CityDev put warrant, all right, is going to make you 6,500, a bit less than $7,000 to offset your losses. So what we want to do with this tool to work out the maximum holding period with this put warrant to replicate and cover the losses in your portfolio is you have to keep increasing it such that the bar on the right here will match the loss bar on the left here. So can you see that in about 13 days time, this warrant here will make you $5,896 to more or less fully offset your losses of 5,800, provided you bought around 589,600 units of this put warrant to offset and to hedge your portfolio. Okay, so this is your maximum holding period if you're looking to exactly cover the loss of your CityDev shares if it fell 7.7%. Okay, but if you're simply wanting to, buy this put warrant because you bought the call warrant, you got it wrong, you've cut your losses, and you want to use this put warrant to ride the downside, if it went to 692, let's say you think that didn't make it past 750 and was coming down to the trailing stop loss, and you wanted to switch into put warrant instead, rather than hold for 13 days, you can actually hold on to it for longer. Why? Because as long as the warrant makes geared returns compared to the share price move, you can keep holding on to it, right? So now again, we want to work out the maximum holding period, and you just got to keep increasing it. And you'll see that in 57 days time, this put warrant will now make 8.3%, not much gearing compared to the 7.7% drop in CityDev shares. So in other words, you can afford to hold on to this put warrant for around 57 days if you're simply buying it to bet on the downward move or pullback of CityDev shares. But if you're looking to hedge, then your holding period will be shorter because you are looking to hedge and cover your losses perfectly. You then can afford to hold on to this for only 2 weeks, for 14 days. Okay, so this is how you use the exposure simulator to kind of work out, how warrants will perform if, you wanted to replicate the return in the shares, or you wanted to offset the losses in your shares. Okay, it works very similarly to the selector tool earlier, except this one tells you in terms of days rather than weeks. And this is really how you can use the tools we have available on our website to simulate the returns on your warrants to see how much more they will amplify given the holding period that you're looking at. But of course, the principle is this: the shorter the amount of time CityDev shares take to move to Joey's target levels, whether it's $8 or to the cut loss level of $6.92, below $7 or $6.95, whatever, the shorter period of time the stock takes to move to Joey's levels, the more the warrants will make in terms of returns. The longer it takes, then the less returns it will make. So you're really trying to solve for the maximum holding period you can hold on to it, or for this view to be realized. Okay, like I said, warrants are not like shares. You do not hold on to them forever. And you really need to be very aware of the maximum holding period, the kind of trading time frame that you have to trade Joey's views. Okay, and with that, I don't have much time left, but if you wanted to know more about warrants, this was not good enough for you, we do have an advanced session that will happen on the 4th of November. We're inviting you to my office, which I'm doing this show from. We will provide dinner from 6:30 to 8 o'clock, and we'll educate you on how you can use warrants, how you can better understand warrants at a deeper level before you use them. All right, so looking forward to seeing you, if you come down. And I believe if you were Joey's clients and you let him know that you're coming down, you will be given a $10 voucher. But I'll leave that to Joey to cover in greater detail. Joey, back to you on how you want to wrap this up.
Sure. So guys, just to take note, so Jamie will be having kind of like a real seminar. All right, this is not online. It's a real seminar in the office, right? Next Tuesday on the 4th of November. So I'll just place the link in the chat. Go to click on it, right? And that's where you could go ahead to check out Jamie's advanced warrant seminar. All right, and hopefully learn more from Jamie as well. Right. So those of you who are clients, if you hit now, essentially that's where you can let Jamie know, and then we'll give out a $10 kind of like a voucher, something like that. All right, Ken. Okay, let's see. Right.
No. So you have to let Joey know first that you're registered for it, and he'll let me know. And then when I see you in person, we will give you a $10 voucher for coming down to attend the seminar and to know more about it. I think with any instrument, it's always important that you know more about it before you use it. Be aware of the pros, but also the pitfalls and the things to note. So, of course, otherwise, if you got no time for the seminar, you're excited to trade CityDev shares and warrants alongside it right away, you can always give me a call at 66010289. Happy to go through with you on any further questions that you may have, and to guide you through the selection of CityDev warrants to trade the shares. Just again, because we're at a very exciting share price level of 750, which is the key entry level, right? We're looking to see if we can surpass it, so that can go towards $8. So otherwise, you can ask us now any questions you might have on warrants or on CityDev shares.
I think you have some questions, Jamie. Should we take like a few questions if you have some time?
Okay. Sure. I see one from Ian Chan. Any warrant ideas for US stocks? This is probably a question for Joey, because I can't give you advice on which US stocks look good. Correct. But if you're wondering on warrants specifically, well, we only have warrants over the US indices of S&P as well as NASDAQ. We do not do single US shares. The reason being, the US shares will not move during the day, where we are opened on the SGX stock market. So we open from 9 o'clock to 5 o'clock. We track the SGX trading hours, and so we only offer S&P and NASDAQ warrants because the S&P and NASDAQ futures are moving during Singapore's trading hours from 9 to 5. Okay, so we only have S&P call and put warrants. With US shares at obviously record high levels, there is availability of put warrants for you to hedge any sharp pullbacks, especially during the earnings season. So that's something you can consider if you're looking at the US market.
Okay. Yep. Correct. So guys, no US stocks for warrants, mainly the indices, right? Because warrants is listed on the SGX like any other normal Singapore stock. All right, Ken. So I hope that helps. Maybe what are the charges like? All right. Common question on warrants, like is it something like, is it different from the stocks and all that? JB, you take it or I could do it?
Well, first of all, the charges are as per what you trade, securities on the SGX. And that really depends on how much your broker charges you, right? Because different brokerages will have different trading brokerage trading fees. The clearing fees are really quite minimal because warrants generally, if you look at the prices of them, on my website now, they are like anything from less than 1 cent to 17 cents. So they're really low in absolute price, which means, the clearing fees are really quite minimal. But likewise for brokerage fees, they should be quite minimal because it's a percentage of the trade value. But in this case, if you were Joey's clients, then I think you can ask Joey what kind of brokerage charges it will be. But yes, they will be charged by the brokers, not us. So we don't charge anything. We are the market makers providing the bid and offer prices for you on the screen that you see. So we are here providing the bid and offer price. We are also providing the bid and offer liquidity or the volumes on both sides so that you can easily get in and out of. And of course, our prices will track the prices of the underlying, and they'll be updated accordingly. On that, I just want to quickly share, we have what we call the live matrix tool. So back to CityDev, this put warrant here, you see that now with CityDev trading at 750 on the offer, this bid price is at 2.4 cents. The offer price is at 2.5 cents. Now, this live matrix tool tells you where Macquarie is quoting on the bid and offer at every point in time when the market is open. So you can check out the live matrix on where our prices are. But as for cost, like I said, you have to check with Joey on how much he charges as a brokerage fee.
Okay, yeah, if you can add on that, basically, guys, I mean, the warrants is like a normal Singapore stock, right? So the charges would be the same as a normal Singapore stock. So of course, it depends on your account type, whether it's prepaid, whether one whereby, there's like contra facility and all that, margin account as well, right? So depends, right? But it's pretty much the same as the stock listed on the SGX. All right, Ken? Okay. Now, let's go ahead to maybe take one final. I think there's one question which is quite common now, is what's the difference between a warrant and an option?
Thanks, TFTF. Well, yeah, it's almost a standard question with every, one good trade live show we do. But thanks for that. Well, the biggest difference I would say, is that warrants have the presence of a market maker providing the bid and offer liquidity prices at all times. Now, with options, it's not necessarily the case, right? Whereby you will need a willing buyer and seller in order to transact against. But with warrants, we're always there. We're always tracking, the share price moves, the underlying share price moves, and updating accordingly. And so, the market maker has prices and liquidity to ensure that you can freely enter and exit based on where the share price moves towards. I think that's the biggest difference. But the other difference is that, most options are traded on the over the exchange counter, OTC. Okay, they tend to be traded on the OTC exchange, whereas for warrants, we are like shares traded on the SGX, it is a form of security on the SGX. So, it can be traded on the SGX. You don't need to trade on OTC. And so it's traded on your brokerage account, whether it's a contra or, one where you pay up cash upfront to trade, and it's got no margin calls, right? Whereas with options, it's traded on the margin account, which means that potentially there's going to be a margin call. And then the final difference, I would say, most important is that options allow you to go long short. And therefore, you can have, a whole array of different option trading strategies, your butterfly, your strangle, etc., etc. But with warrants, because they are a security traded on the SGX, you cannot go short on them. Well, you can short them intraday, but you have to cover them during the day because otherwise you'll be subject to the buy market. And that's consistent across all securities traded on SGX, right? Which means you can't do your long short strategies. You can't short sell a warrant to collect your premiums. You cannot. Okay, but the upside of that is that because you can't just do a naked short, you're not going to run into an unlimited loss situation, which you can whenever you short sell option. Okay, so therefore warrants, unlike options, you have got a limited loss, whereby the maximum loss you can make is really just 100%, right? Whereas with options, it can be more than 100%, especially if it's traded on a margin account or if you did a short sell to earn your premiums. Okay, so I think that's the biggest difference. Well, I would like to also point you to a video that we actually did. It's available on YouTube. If you go to our YouTube channel, over here I can't share, unfortunately. But if you go to our YouTube channels or our Facebook channel, you're going to find pinned a video covering the differences between an option and a warrant. We also have if you don't have time, we also have a 1-minute video which also covers the difference between a warrant and an option, here under the frequently traded video. Here you go. You've got a fun video of myself and my colleague that tells you the differences between warrants and options in under a minute. If you've got more time, you've got about 20 minutes to share, I would suggest you go to the YouTube channel or our Facebook channel to go have a look at the podcast, which we discuss the difference between warrants and options in greater detail, using examples, anecdotes shared by another investor or trader, I would say.
All right. Okay. So yeah, I think anything else, Jamie, or I think you want to take one more question, or
we can take one last question.
Okay.
If there are more questions.
I think there's one a little bit more advanced, right? Does the effective gearing fluctuate, right? Can we sell the warrant before the expiry?
Peter, you're always asking very good questions. Peter Lai is obviously a frequent investor who tunes into One Good Trade. Hope the ideas have been great for you. So, but very good question, Peter. Does the effective gearing fluctuate, and can we sell it? This is the CityDev call warrant before expiry. So I'll answer the second question first. Peter, definitely sell it before expiry. So the examples I've gone through to show you, how the warrants will perform with a longer holding period. That is really to tell you what the maximum holding period is, to tell investors who are looking at the warrant the number of weeks or the date that they should aspire to sell out of the warrant or cut loss or take profit from the warrant way before expiry. Typically, when you hold to expiry, you have the I would say the lousiest kind of returns. Why? Because the time value of the warrant becomes zero. So if the share price doesn't remain, changed from now until expiry, basically you're going to get less back at expiry compared to if you exited now, because there's a presence of time value which will erode to zero on expiry. Okay, so sell the warrant before expiry for sure. Now, does the effective gearing fluctuate? The answer is yes. Why? Because, well, if you bought a warrant right now, and like I said, going back to the example of KGLW, let me just quickly go back to it, right? We've got the CityDev warrant, and no, not KGLW. I think that was the Yangzijiang warrant earlier, right? So if we were to go to this SCEW, which is the CityDev call warrant, you'll see that the gearing of it now is about 5.7 times, right? But if CityDev now were to trade to $8, you're going to find that the gearing will fall. Why? Because the reason is because as the stock moves in your favor, the delta gets higher, which means the risk of the warrant, this being a call warrant, actually drops. So effective gearing not only tells you how much more the warrant will move in relation to the shares, right? It also tells you the risk, right? It tells you the risk of the warrant. And in this case, the bigger the effective gearing level, the more risk, but the more return it will give you as well if your view was right. And so if the delta gets higher, meaning the shares are moving more towards your favor, if it's a call warrant, the shares are moving higher and higher, the delta will get higher, which means the probability of the warrant expiring with value at expiry gets higher. Then the gearing will drop, which means you will make less return, but the risk is also lower. So this is how it will change over time. The converse is true. If now CityDev shares go down to $7, you'll find that the gearing of this call warrant will go up because the risk has increased. But if then you enter into the CityDev call warrant and your view was right, your return will also be higher. So higher risk, higher return, and vice versa. So yes, the effective gearing, Peter, will change over time depending on how the shares move during the life of the warrant. If the shares remain unchanged in its price level and more time has passed and it's going to head towards expiry, there's less and less time left, you find that the risk also increases. Why? Because there's less and less time for you to get your view right? So the gearing also increases with less time to expiry, or else constant.
Yeah, I think what Jamie mentioned is very, very powerful, right? And also, guys, I mean, just to keep it simple, like I say, warrants, right? It's not meant for you to buy and then you keep until expiry because you want it to expire. No, right? It's for you to, to get out as soon as possible for the short term. It could be 1 week, 2 weeks, 3 weeks. I mean, as quickly as possible, right? It's not really meant to go until expiry because by then, right, that's where the time decay will have played out, right? The option, the value of the option will be much lesser already, right? So you want it to act fast, move fast in a particular direction that you want, get out where you need to. If it doesn't play out, you get out, fine, right? Don't want to just hold it all the way, lah. Right? Okay. I think we have one more last question, Jamie. I think regarding the expiry again. If you do not,
Damien, so if you do not actively sell the warrant, I hope you actively sell out the warrant. Will it be sold upon expiry? Well, the answer is no, it will not be sold. So what happens to expiry? I do have an FAQ because it's one of the favorite questions. Basically, they are all cash settled, so you don't have to do anything. It's not going to be automatically sold, but it's going to be automatically settled. So what happens is that we need to ascertain on expiry if there is any expiry value left. How will we determine it? For stock warrants, we use the average closing price of the share. So in the case of CityDev, right, the 5 days before expiry, we will take its average closing price to use it as a settlement price of the expiry settlement value of CityDev shares. Now, when that we have that, we need to see if the strike of the warrant is above or below this settlement level. Basically, if you buy a call warrant, again, going back to the example of the CityDev warrant, okay? So this SCEW has an exercise price of 684. Okay, if CityDev shares will to settle at $7, that is above the strike, right, of 684. So that will be value. How do we compute it? We use this settlement level, which is the 5-day average closing, minus 684, and we divide it by the what we call a warrants per share figure of 1493 to compute the per warrant value. Okay, but if CityDev shares average in the 5 days before expiry, if it averages at 680, which is below the strike, what happens? You're not going to get anything back at expiry. It becomes zero. So it's 100% loss for you. What happens if the expiry value of CityDev shares was 684? You'll also get nothing. So CityDev shares have to be above this strike for you to get anything back at all. If there's value, what will happen? We will send you the check amount. You don't have to do anything, less the CDP charges of around $22, and we'll mail it to your mailing address, and then you can cash in on the check. That's what's happening on expiry. But like I said, if you were to sell out of the CityDev call warrant now, you take your profits, you would definitely get more back than at expiry if CityDev shares were trading at the same price level. Okay, Damien, so please sell out before expiry.
Yeah. Don't hold all the way just to get the $22 or something, right? Sell it. Yeah. Okay, got it. She got it, right? Haha, got it. Okay, fine. I think, thank you so much.
Thank you. Thanks, Damien. Thanks, everybody. Great questions today, and a really good session, on CityDev, as well as Yangzijiang. I must say, well, Joey, look forward to the next session where we can again, hopefully, share the good news that you have been spot on again, and we can have a look at how CityDev will perform, and look forward to the next one good trade.
Yeah. So very good, guys. So I think we have pretty much come to the end. I hope we have answered some of the questions that you guys have. If you missed it, apologies. Can probably join us in the next One Good Trade live show, all right? But just want to share a little bit more, all right, on what Jamie has shared just now regarding the Macquarie Warrant Singapore, the YouTube. So just go to YouTube, right? Macquarie Warrant Singapore. You can find a lot of videos, right? Very interesting videos about corporate actions, what happens, dividends, blah, blah, blah. All right, it's all over there, all right? That's where Jamie and her team kind of explain and break it all down for you. Very simple concepts. You want to check it out. All right. The link is in the chat as well. And if you want to find out a little bit more, guys, as I say, about the entire One Good Trend strategy, as you can see right today, I don't have time to break it all down for you. But if you want to deep dive into the 7-step checklist that we have, how we know when to get in, when to get out, all right, how we have a tool like this to guide us on how to get in and out as well, and in seconds, right, whether to turn on the bullish and even bearish signals. Attend a free webinar, all right, the link is right below. I think we have a, no, I think not I think, but yeah, we have a last webinar next Tuesday, all right, 7:30 p.m. Link is right in the chat. Click on it, register for it, and this way I can't wait to share more with you. All right, so that is pretty much for today. All right, anything to share, Jamie, or that's it?
No, see you at the seminar. And remember, if you're coming or Joey's client, let him know that you've registered so that I can present you a $10 Takashimaya voucher when I see you. And of course, hopefully we can chat over dinner.
Yep. Okay, good. So that's it, guys. Thank you so much for joining us in One Good Trade live show. We'll see you guys the next one, and wish you have a good week, everyone. Take care. Bye-bye.
See you. Bye-bye.
Bye, everyone.